Hey, what's happening, guys? Dan Dower here with another Options in Play video update. So we're wrapping up the end of May here with another down session. It's been a very weak month, and a lot of it's due to headlines. But there has been some of this action has been driven by earnings, with which it's not across the board, but there are some ugly reports coming out. Some you know some specific areas like retail, but also some of the chip stocks, and a lot of this is due to headlines again. But it just kind of goes to show that whether or not you focus on a lot of these earnings names, what they're saying is having an impact. So I like to, even if I'm not playing like specific stocks or specific sectors, right? I do like to kind of take note of what they're saying, just because it might be able to shape an opinion or shape a strategy on some of those names after earnings. Um, so anyway, without further ado, we got earnings on the radar for next week and first week of June. So it means we are at the very end of earnings season, and doesn't mean we won't have bigger names, because this week we will have some bigger names, but they're going to be fewer and farther between. And it's going to be just very stock specific action, because what we've noticed over the last 2-3 weeks is that certain areas just aren't getting rewarded, right? I mean, software, it's been a struggle to get paid on some setups. China tech names, been a struggle to get paid. Retail, there's some volatility, but it's also very setup specific, right? So that's going to be, when you follow along in this video, you're going to see that, a lot of what I talk about, it's going to be very specific to the individual stock or the sector. All right. So Monday before the open, nothing scheduled. So not a single name. Monday after the close, two software stocks. So Coupa first up, pricing in about $12. Chart looks great, right? So chart looks great. The performance has been great. Go daily. So chart great, performance great, expectations are high. What's the problem, right? Is that these types of setups have really struggled to get paid on the upside. Um, it sold off even after a strong report last quarter, right? And its peer Okta was up today, but it didn't make it as far as what they were pricing it. So it seems like the best opportunities on these names end up happening if they drop or sell off post earnings. So have good numbers and sell off, pull back. Um, that's been that's been some of the better opportunities versus actually taking these names into numbers. So that's probably what I'll be watching on Coop to see if maybe it pulls back post earnings, maybe to like the 50-day or even the 100-day for a trade opportunity. Box, on the other hand, is a little bit different. So Box is trading pricing about 2 points. And what's interesting about Box is not only does the chart look weak, right? It's underneath all near-term moving averages, and not only is it coming off a weak quarter, but the stock has a history of acting weak on earnings. So it's closed red on the day of its earnings 6 quarters in a row. So if that's not consistency, I don't know what is. So stock is acting weak, coming off a weak quarter, and has a history of weak reactions to earnings. So that might be one you look at as a speculative bearish bet. There could be room, just well-defined support down around 16, right? Tuesday before the open, really the only interesting name is Tiffany's. So they're looking for about six and a quarter on this one. And the reason why I think this report might be interesting is because it did have a smaller move in March, right? But that was also because they gave preliminary guidance back in January. So the holiday sales guidance they guided in January, and so in March didn't have as big of a move. But prior to that, Tiffany's was swinging around pretty sharply when it reported. So there, December, right? Had some big reversals. So back at the end of August, right? So another huge move, and then obviously back in May of last year, it was just an epic move. So um, options kind of priced more in line with what it did last quarter, but at the same time, they guided preliminary numbers before that. So I feel like the options are a little bit light compared to like the 4 quarter average. Technically, the stock's kind of in no man's land and it has a history of big swings. So strangle. volatility strategy, thinking maybe the options were underpriced. Could have maybe like 8 to 10 points either way versus the 6, 6.25 it's priced in. After the close Tuesday, Ambarella. All right, so chip stocks, right? Tough spot. A lot of the trade headlines are directly impacting these names. So they're pricing in 4.5. This was one that we wrote after March, right? So this was a trade into March earnings and then after, and honestly, so much has changed, and the setup just does not look that compelling one way or the other. That it just seems like a really tough trade this coming week. It's like the stock has collapsed. It's underneath all of its moving averages. It doesn't really look, great from a technical standpoint. Kind of in no man's land, and semis really just haven't been like good trades on earnings this quarter. So as much as like I like trading the name and we've had some success with it recently, I just think that right now it's mostly an avoid for me. Pivotal, so another software stock. This one's priced in at about 3 points, and this used to be a pretty volatile name. So you could see last year had a couple of real big moves when it reported, but volatility's been kind of contracting a little bit. So the last couple of quarters, the volatility's been contracting. Um, what's interesting though is that it's tightened up, obviously, right? So the stock has gotten into more of a consolidation over the last few months, and um, you know, I have traded this in the past, and it's been a little bit more frustrating the last couple quarters, but might be worth it for like a low debit shot to see maybe if it kind of reverts back to that trend of early last year when it was seeing like those 6, 7, 8 point pops and drops, plus like the tight pattern. Maybe if it can go a few points, it triggers like a breakout or a breakdown. So um, don't love the setup, but it does seem like it's kind of coiling and there could be some potential, especially because it does have in its recent history some bigger moves. So it's definitely one to keep an eye on. Salesforce also Tuesday after the close. So this is one of the big boys next week. They're pricing in about 9.5. I was looking for a run ahead of numbers. Just stock has been down in like this really big support range, right? So I was looking to see if maybe it took off ahead of numbers because I mean Salesforce is just a beat and raise machine. I mean that's just how they operate, and unfortunately the whole overall market's kind of prevented that move, but it has been trading sideways for months, and it seems like a move is due here. It's just again, falls into like the same category that it's been a tough quarter to get paid on a lot of these software stocks that are, this one's not at its 52-week high, but it's not too far removed. So, I like the name. I like the way it moves sometimes. Right now, it's just kind of stuck sideways. It hasn't really had huge moves on earnings in a while. Back in November, maybe a little bit different story because there was like some kind of crazy volatility and it dropped really sharply ahead of time. Um, may stick with the speculative bullish bet here, but possibly extend the time frame. Maybe like push out to July or even further, just to see maybe like smooth out like the higher near term implied volatility on this one. All right, Wednesday before the open, American Eagle. So we get some retailers here. So about $1.75 is what's expected. It's been absolutely clobbered into earnings, and peers Abercrombie and Gap both really disappointed. So it seems like sentiment's ultra low in this thing, which as it like approaches like December low, it's gotten smashed. Peers have disappointed at longer term support. Maybe it sets up like a surprise higher, right? Maybe like you get like a not as bad as feared relief rally type move, but it's not a particularly great setup. But it's something that has had occasionally some bigger moves, and this huge move lower might set up some sort of like snapback if the numbers aren't as bad as Abercrombie and Gaps were. G3. So this is another one. This thing's just been decimated. Well, it's lost about 40% of its value into earnings just in the last month. Um, so it's priced in at 4 points, which seems light to me. Just it not only has this thing had some bigger moves on earnings just in the past, but the fact that it's lost 40% of its value in a month, and it's it's basically back down at like a pretty big area. To me, it makes it interesting. So I'm thinking volatility strategy in this strangle or straddle. All right, Wednesday after the close. Couple more retailers and some tech. So Stitch Fix, first off, 375 is what's priced in. Huge pop. So it's had some really big moves over the last 4 quarters. So March, right, December, and then October. But options are only priced in 375. So it seems those options are priced way under the last 3 quarters average. It 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 so it had a huge drop in December, came all the way back, then a huge pop in March, and now it's come all the way back. So it's set up underneath all near-term moving averages. Action's been weaker, um, but at the same time, it's pretty heavily shorted and it's had some erratic moves. So I feel like this could be another one too, where the options are a little bit mispriced. So maybe a volatility strategy, strangle or straddle in that one. MongoDB, 18 points. So high flying software stock coming off a monster breakout and run. Um, you know, I don't know what else to say. It's like, another expensive software stock that's had great recent performance that's near its 52-week high. Options are super expensive. Um, don't think I'm going to play this one. If there's a pullback to like an interesting area, maybe like the 100-day, possibly we'll revisit the idea or we'll think about the idea for a trade. But in terms of earnings, probably going to be an avoid for me. Five Below, another retailer here. So 11 points is what's expected. It didn't really get much of a boost from Dollar General and Dollar Tree, so kind of a couple peers there. But it's overall been a pretty solid performer. It's off its high, but it's still kind of in like a bullish uptrend, right? It's holding above some key momentum levels here. So Dollar General, Dollar Tree, both pretty good. Five Below last quarter was all right, and the stock is acting more bullish than bearish. So maybe you look for a speculative upside bet. I haven't really had success with this name in the past, but Dollar General and Dollar Tree might be good names to take a cue from on this one. Thursday before the open. All right, networking name Sienna. 3 points is what's priced in. So this was a leader and actually had a really nice quarter back in March, but a monster reversal, and now it's kind of gotten washed out. What's interesting is that it's kind of come back down to obviously not only test the 200-day but back test like this a long-term level of resistance. No, it's not gonna do the job. So it's come back down to back test like a long-term level of resistance at like the 30 range, and to me, um, this could be one where you look at as more of like a speculative move. I mean, a couple good quarters. I feel like any type of rally or rebound would probably be longer term in nature because there's still going to be so many like tariff and trade headlines. So maybe some sort of calendar spread or a longer term call spread. Basically thinking that maybe once the headlines recede, that this thing could start to work its way higher because the numbers have been really good for the most part. Momentum was great for a while, and then it's really only recently gotten hit. So I mean, like that's one that I think maybe like some sort of longer term strategy or some sort of calendar spread might work. So Signet is also Thursday before the open. I'm hesitant to do anything with it because options are kind of expensive. Looking at like 3 points, and I mean this thing has just been absolutely destroyed. And it seems like it's going to be tough to see it go up, but is there a whole lot of downside from here? It's tough to say. It could be a mover, so I wanted to put on your radar. But at the same time, I don't think I'd be doing anything with it. Don't really like the setup. Don't have much of a read on it, but it could be a mover. It's been a pretty big mover in the past. All right, Thursday after the close, you got some recent IPOs. So Beyond Meat, first of all, 15 points is what's expected on that thing, and I have no clue what to expect. I mean, it its stock has been unbelievable. It's up 50% since it debuted. Uh, it's a short squeeze. I mean, it's trading at a ludicrous price to sales, so I don't know if fundamentals even matter at this point. It could be wild, or it's just it's such a wild card to me. I don't even know what to make of it. Um, it could be crazy. I don't have a read, so I probably won't do anything with it. But 15 points is what's priced in. If it seems like the last couple of weeks, this thing has been in like a 20-point plus range for the week. So options at 15 points don't really seem that bad, which again sounds kind of crazy. I just don't have a read on it. I don't know what I would do with it, but it could be a wild one. Zoom kind of falls into that same category too. 12 points is what's expected. You can see just like on a weekly range basis, this has had some pretty big moves. Um, the problem is that the valuation is super 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 high on this one too, and it's up a lot since it IPO'd. Uh, Not to mention it's a software stock, that's had a great run, which again kind of puts it into that category of some of the ones we've seen that were solid news. So don't think I'd do anything with Zoom, but it could be interesting if it starts to crack because it does seem like it's leaning around the bottom of this trend, this uptrend, and it could be a room down to 60 if it really starts to get hit. PD, another new issue. So great run. Software stock, not at its 52-week high, but not too far off. Valuation stretched. You get the picture here. Looking for about 9 points. Uh, of the three, maybe this is the one that you could actually see a move. But again, like these setups are just tough right now. Software stocks that are up a lot, pricing in big moves that are close to their 52-week highs. So. Um, might be better off just waiting and seeing what the numbers look like and then reevaluating. DocuSign, another software name, so pretty big software name night. So this one is off its high. It's a newer IPO, right? Like debuted last year. Um, they're pricing at 5 points. Pretty nice couple month consolidation here. So it looks like there could be some potential. Kind of like a coiling spring if it breaks out or breaks down. Um, the problem with DocuSign though is that it has a pretty bad history of reactions on earnings. It hasn't been rewarded for an earnings report in several quarters. So it's just it doesn't really have like the big moves um, to warrant laying out the money on the options, or at least it hasn't for the most part, like the last several quarters. So you kind of couple that with the fact that a lot of these software stocks have been sell the news events. Um, you know, it seems like it might be more worth it to wait until after, see what they say. If it starts to go, maybe there could be an extended move through 60, right? So if it's decent and it gets through 60, then maybe you could look at it as like a swing for a possible retest of the high up in like 68, 69 range. Domo, another newer IPO software name. This thing had a really wild run from January up through March earnings, and then March earnings it popped like 8 points. This time around, they're expecting about $5, so that's the price to move. It did, like I said, it did move 8 last quarter, and then it kept going another like 8 on top of that after. So um, overall, the options don't seem too expensive compared to what it did last quarter. Um, the chart looks a little unusual, that it's just kind of like in a slow grind lower, and it's now breaking underneath some near-term moving average support. Pretty heavily shorted stock though, and the way the options are priced, it might be worth it as like a volatility strategy, just because there's a kind of an air pocket underneath, and it's obviously well off its high, and that short interest could provide some fuel to any sort of like rally. So. That could be one of the ones on Thursday that I look at as well. All right. So that's it because Friday there's no company scheduled. So Thursday kind of wraps up earnings for the week. Although this coming Friday we have the jobs report, so that'll be a pretty big catalyst. All right. So as you can see, still plenty of interesting names. They're just not as jam packed every single night, and that's just kind of how it's going to be probably through June until earnings season starts up again in July. But still plenty on the calendar, and we're kind of getting into like biotech time here because you have ASCO this weekend, EHA coming up, and we have a few other events that are expected soon. So we're not going to be wanting for catalysts. So there's plenty on the biotech front to expect. So I hope you guys have a fantastic night. On a programming note, we got our option coaching session coming up this Monday at 4:30. So I hope you guys can make that. Have a wonderful weekend, and I will talk to you all on Monday.